Hi, everyone. Today, let's talk about the Fed and what they're going to do with the interest rates next week. Then we'll go over the charts, and then we'll take a look at my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the market is open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So starting off here, we have Jeffrey Gundlach saying the Fed is going to raise rates, but they shouldn't. He says he does not think the Fed is going to do 50 basis points, but he does think 25 basis points is a serious possibility just because of the credibility. They've been putting out 25 basis points for the last several meetings, and they've basically said that they're going to stick with that, at least for the short term. And Gundlach does think that that is still going to be the case here next week. He says despite the fact that Silicon Valley is going bankrupt and Signature Bank is going bankrupt as well, he thinks that the Fed is going to keep up with the hikes. If you have any questions on either of those bankruptcies, I've put out 2 videos in the last 2 days about those bankruptcies and what's causing them and what seems to be the case going forward. And moving on, they mention here about an 85% chance of 25 basis points. We talked about that in the last video. That does seem like a pretty high percentage. That's not the current percentage, and we'll look at that in the next section. But right now, Gundlach does think 25 basis points is going to happen, but he doesn't think that that is a good idea and that it could potentially cause this contagion within regional banks to continue outside of the current 2 that we have. And there are a few others that are currently being looked at to see if they need funding from the Fed or from other banks in the short term. Moving over to the Fed rates, you can see here there is now almost a 47% chance that we get a pause here in March. So not quite the 85% that was referenced. You can see it's now 53% that we're going to get a 25 basis point hike. The 50 basis point hike has been wiped off the map, and now it's almost 50-50 that we're going to get a pause here. These percentages continue to change on a regular basis, so you should check on this on your own. Obviously, it's going to change pretty dramatically with CPI and PPI tomorrow and the next day. So definitely keep those in mind. We have CPI tomorrow. And then moving on here to May, you can see we do expect to get that 50 basis points the next month. So what the assumption is right now, is that we will either get a pause in March and then we will get 25 basis points in May, or if we get 25 basis points in March, then we should get a pause in May. So either way, it's interesting. You can see there's also a small probability here that we do stay at the same rate through May, 27%. Again, much higher than it has been here recently. Previous probability was 0 and it went up to 27 here today. So keep an eye on this. It changes rapidly. And this really does have a large impact on the markets here on a day-to-day basis. Moving over to the charts, starting with the S&P 500 here on the hourly chart. It actually was a fairly positive day considering we started out extremely negative. You can see those wicks that we had to the downside down at 381.30 or so, which does correlate with the highs going back to mid-December. We threw wicks through that level pretty deep here actually, all the way to the mid area of this level. And looking at RSI here on the 4-hour chart, you can see we did make higher values on RSI despite having lower price action. So potentially looking at this as a short-term bottom as long as we don't break down tomorrow. We threw wicks to the upside at this longer-term trend line that we've been watching as well. So looking to see if this trend line breaks sitting up here at 389, and then looking to see if that 381.30 level breaks to the downside. And if it does, then we have to be looking to the lows here from this previous consolidation, sitting around 279 or so. Looking at the indicators, though, you can see somewhat bullish momentum starting to move in the bullish direction on the 4-hour. RSI is stepping up. RSI on the hourly also stepping up, but hourly momentum is a little bit weak here into the close. Moving over to the NASDAQ. This was the strongest index from today. You can see it moved up. It was actually positive on the day through multiple wicks through the 200 SMA and 144 EMAs here on the 15-minute chart. Also correlated with the 55 and 144 here on the hourly chart. Got rejection in that area. We're now in an area of consolidation. Does look like we could be moving higher. We do have kind of a double top in here, which we did just slightly take out that midpoint, which is interesting. But it didn't really crash here at the end of day. So looking to see if we can hold maybe 287.50 at the low from yesterday. That would be interesting. Maybe we even retest the low from today. That would be pretty concerning. That's a pretty big down move from today. Obviously, CPI could do that, but really it looks like we're kind of in this slightly bullish pattern, potentially looking for a slightly bullish CPI reading. And then if we do break out to the upside, we're looking for that 341 level at this previous resistance. That's the high going back to Thursday from last week as well. Does make sense that we could get a retest of that level. Multiple EMAs and SMAs here to the upside that we would have to break through, but right now it does seem like that's possible based on today's results. Of course, we do have to get through this zone of resistance that we've tested over the last 2 days. We do have another zone up around 297, 298, so a couple of areas of resistance to the upside, but really I would be looking for that 341 level as long as CPI doesn't come in terrible. Moving over to the Russell here and the Dow on the 4-hour, you can see pretty tough day on the Russell. Did make a new low, was bearish on the day, but did find some support at this longer term trend line. Did end up closing below it, so that's not great, but we did have a lot of volume on this bullish candle here before we did sell off in the midday, which is interesting. Pretty extended here on the 4-hour. You can see very, very oversold conditions after this down move. Does seem like an area where we could find a little bit of a bounce. We just haven't seen that materialize yet. Looking at the Dow, looks quite a bit better, looks similar to the other indices. Slightly bullish on RSI, slightly bullish on momentum here. Does look like we're ready for a pullback up to maybe 326, maybe 328 in this previous consolidation zone. That would correlate with the 55 EMA here on the 4-hour chart. And once again, that's all dependent on CPI tomorrow. Moving over to Apple and Tesla here on the daily chart. I did want to highlight the daily here. So we threw a wick to the upside, did get rejection at the trend line, which is interesting. This trend line continues to hold. Could get the candle break and continuation higher. That would be interesting. But right now we're stuck between the 21 and the 200 SMAs here. We also have VWAP to the upside. So pretty much stuck here on Apple. Does look slightly bullish. Momentum did step down here today, so looks like it could move in the bullish direction. We also had a step up on volume today, indicating that we could get a continuation here. Moving over to Tesla, similar thesis. We tagged that 55 EMA on the daily chart. We talked about that happening. We did that here today, and we got a strong reaction and a move much, much higher. That 55 was sitting down at 163.79. We closed the day here at 174.48, so slightly bullish on the day. Definitely good to see that on Tesla. It's been quite weak over the last week. Momentum did get a step in the bullish direction, but still looks weak. And then RSI still looks very weak here on Tesla. So keep an eye on these. Apple may be moving higher. Tesla might have found some support. We'll see how that looks after tomorrow's session. Moving over to transports here on the 12-hour and the daily chart. I wanted to highlight this lower trend line that we were right on top of. We gapped right to it, put a doji right on top of it here on the 12-hour chart. You can see the daily chart actually moved below it, which is interesting, and then rallied right back to that level. Momentum on the daily, very weak. Momentum on the 12-hour, very weak, but oversold, so that's interesting as well. Historically, transports has been quite strong since the beginning of the year. Really, since October, transports have been pretty strong, but this is threatening to break down that trend. If we do come down and retest, that would be around 218, 219. And then we have the lower support line sitting at about 215. So that would be a pretty big move to the downside here for transports if we did have to test those lower supports to get a little bit of a bounce. But right now we have a candle of indecision. Certainly could be a setup for an island reversal. That would be interesting. But right now you have to treat it like it is. Does look rather weak going into tomorrow's session. Moving over to staples and discretionary. Staples continue to look a little bit stronger. Lots of volume here today on staples. Did throw a big wick to the upside, which is interesting, but it did look more bullish than yesterday. This is the daily chart, by the way. Moving over to discretionary, did move lower, did fill the gap, did come back and retest that high volume zone at 138.80. Didn't quite come down and retest the 135 level that we were talking about. Also still have this gap fill here all the way down to 134.60. A couple of levels below there that are interesting as well. If this middle area does break down, then you have to look to this most recent low at 127.90, maybe all the way down at 126.80. That would be interesting. But right now we're still in a holding pattern. Does look weak going into tomorrow's session. Volume did step down here today, which is interesting, but momentum is still in the bearish direction. Both RSIs do point to bearish momentum as well. Moving over to yields here on the daily chart, just to give some longer term perspective, you can see we've been rallying for a very long time. Then we had a multi-day melt up here on the 2-year and the 10-year really. But since then, we've had 3 days of huge selling here on yields. Came all the way down to the 200-day SMA here. Reached to that level and found a little bit of support, but we took out all of these most recent lows here on the 2-year. Oversold conditions here on the daily chart. Similarly here on the 10-year, retested that 200 SMA through a wick to that most recent trend line that we were talking about at 3.424. Tested that level just for a moment and then did find some support. But right now we're still back in this zone that we've been in for a very long time, going back to September of last year. It does seem possible that we're just going to hold in this area, especially with the idea that we could potentially get a pause from the Fed. That would be interesting. That would obviously take the wind out of the sails of yields for the near term. Moving over to the dollar here on the 4-hour and the daily chart. Similar to yields, we've been selling off quite strongly. We're testing the 55-day moving average here, sitting at 103.511. Tested that area, found a little bit of support. You can see we're right below the trend line that we were watching at 103.64. Momentum on the 4-hour, very bearish. Oversold conditions on RSI, bearish momentum on the MACD as well. Generally meaning that we're going to break down from here, potentially looking at 102.70. That would be interesting back at these previous lows and the high of this consolidation area. RSI on the daily chart also looks very weak, breaking down from that SMA quite strongly. And obviously the dollar tends to do well when yields are going higher relative to the rest of the world. And right now it does seem like we're going to get that pause, in my opinion. That way the Fed just has a little bit more time to look at what problems they're causing and how they're going to solve those problems. Moving over to JNK here, despite the strength that we saw in tech, looking at the 4-hour and the daily chart here, JNK was quite weak. So we came back up, retested that trend line like we thought that we might, hit the area of highest volume here on the 4-hour chart, tested that level and then broke down really strongly. We're sitting right at the wick going back to Tuesday, February 21st. If we do break down from that wick tomorrow, then we're looking at probably 88.60. That would be a big down move. We should expect growth to probably go with that. So we had a little bit of a strong day in tech and the NASDAQ. But right now, it looks like high yield is telling us that that was going to be short-lived and that this is probably going to break down further here tomorrow. RSI on both looks weak. Momentum on both looks weak. And we should really be considering if we're going to come back down to this most recent area of consolidation around 87.80, or maybe even the very lows around 86.30 or so. Moving over to TLT on the 4-hour and the daily chart, you can see we rallied really aggressively. We gapped up really strong and then sold off kind of throughout the day here. Ended up filling the gap, finding a little bit of support at this trend line. You can see we tagged the 200 SMA just like we thought we were going to. Touch this trend line and then ending below it, which is interesting. Looking at the volume here, you can see that area of highest volume at 107 ended up being a little bit too strong here. This previous consolidation areas ended up breaking down to that next area of highest volume at 105.60. So ended up staying pretty much right there. We'll look to see if this bounces tomorrow. But right now, it does look a little bit weak here into the close. Volume very high here. People are moving into treasuries as an idea of safety. And you can see what that looks like. 2 huge moves higher on the day on TLT, something we haven't seen in quite a while. But the question is that going to continue and can we hold above the 200-day moving average? Moving over to volatility here, we continue to throw wicks to the upside. This is the 12-hour and the daily chart. We're overbought here on the 12-hour, very close to overbought here on the daily chart. These levels of resistance continue to hold. How many of these can we do in a row? It's a good question. Certainly could go higher, certainly could go back into these previous highs at 34 to 35 zone. That would be interesting. But right now, we can't hold above these trend lines. Does look like we're still in a bullish momentum here, but we do have to consider how close to oversold we are in the short term. Does certainly seem like we could get a bounce. And the length of these wicks here is certainly a pretty big indicator that we're in an area where a bounce is possible, despite a lot of the bearish looking indicators. Moving over to my accounts here, you can see I actually turned a pretty decent profit on my individual account, which is nice to see. Unfortunately, I traded pretty poorly in my IRA. I knew I shouldn't have been doing that. I tried to trade some short-term options to capture a little bit of downside and protect myself in this position, but ended up being a little bit more of a negative there. So I'm probably going to leave this alone. We'll see if we get assigned here and just wheel this as I was planning to previously. Seems to work out a little bit better when I do it that way. So right now, no positions going into CPI besides this IWM position, which does expire in 2 days. I'll probably continue to roll this out as long as the IWM continues to stay lower. If it does rally, obviously I'll let it expire worthless. If it does get fairly close to 179, I might let it expire and take those shares so that I can sell calls against it. We'll see how that plays out, but obviously CPI is going to be a big indicator on what we see and what we do over the next couple of days. Let me know in the comment section what you think the Fed is going to do next week. Are they going to pause and give themselves some room to help solve problems? Or are they just going to continue to raise rates and try to fight inflation, even with some of the bigger problems that we're seeing across the economy now? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.